I'm sure today's conversation will be just as captivating as the others as we hear about the economy, nationally and locally, along with some other surprising topics. And today's speaker, Mark Vitner, is someone we know well. During our most recent leadership trip to Charlotte, North Carolina, he was kind enough to spend time with our business best practices team at Wells Fargo. Mark is a highly sought after speaker, particularly on doing business in Florida, something he's made a professional focus, and he's regarded as a national thought leader on Florida's economy. Before we begin, I want to thank the series sponsors who are listed on the screen, and also the South Florida Business Journal, our annual series media sponsor, for their partnership. I encourage you to read the journal's online stories daily to stay on top of all the breaking business news and trends in our region, including how our technology sector has gained significant traction during the COVID-19 pandemic, and how more tech leaders are relocating here as a result of this technology spurt and our pro-business climate. And now on to our program. Today's moderator, Andrew Rosen, is chairman and CEO of Kaplan, Inc., one of the world's largest and most diversified education companies, and executive vice president of Graham Holdings Company. Since joining Kaplan in 1992, Andy has helped pioneer much of the company's innovation and growth, with a focus on student success and outcomes. Under his stewardship, Kaplan has built some of the world's premier leading organizations, expanded his presence around the world and across the age spectrum, established new partnerships with universities and companies globally, including the cutting-edge new technology platforms, and spearheading the use of learning science to drive improvements in the student experience. Andy is also author of Change.edu, Rebooting for the New Talent Economy, which details the history of innovation and incentives in American higher education and lays out a prescription for restoring its preeminence. Bill Gates, writing in the Washington Post, called the book truly important. Andy is a graduate of Duke University and Yale Law School. He and his wife, Marcelle, a physician, have 2 children and live in Fort Lauderdale. Ladies and gentlemen, it is my honor to introduce my good friend, Andy Rosen.
Thank you, Bob. Appreciate that introduction. And while I have you publicly, let me just give a little congratulations to you, because you seem like the Alliance is on a roll nowadays. You've got 2 deals with Amazon you just announced. One is an extension of a previous facility and plus a new facility. You brought KeySource Pharma down here, and it seems like the pipeline is good. So congratulations on that. Also,
thank you, Andy.
Yeah, good job. And, I also want to sort of reinforce your point about this speaker series. I mean, Joanna Garrity was fantastic. She's the president of a company that matters a lot to South Florida, JetBlue. And then I would just say, there are a lot of people on this series who know Matt Caldwell and Mike Jackson. I guarantee that you heard stories that you hadn't heard before in those sessions. So those were really terrific. Today's session is going to be a little different. We are honored to have one of the top economists in the country to join us, and in particular, somebody who's had a real focus on the Florida economy. And so we're going to take this opportunity to really dig deep into how the Florida economy got to where it is today. So to do that, I want to introduce Mark Vitner. So Mark is a managing director and senior economist for Wells Fargo's corporate investment bank, where he's responsible for tracking U.S. and regional economic conditions with a particular focus on Florida. Mark writes for the department's weekly and monthly economic reports. He produces regular publications on residential and commercial construction, regional economies, and issues impacting small business. You've probably seen his commentary featured in the New York Times, the Wall Street Journal, Bloomberg, lots of other publications. And you might see him, he's sort of frequently on CNBC and a lot of other networks. Mark's originally from Atlanta. He got his bachelor's from the University of Georgia. He got his MBA from the University of North Florida and did further graduate work in economics at the University of Florida. So that time in Florida was important, as we're going to hear soon. Mark, welcome.
Good to be here. Good to be back with you.
Great. And for those in the audience, if you have any questions for Mark, please post them in the chat. And if we have time, we'll get to as many as we can. Mark, now we're going to talk about Florida, but we've got you here, and it's sort of a breaking news moment. Just a half an hour ago, the jobs report came out. Can you just tell us what did the report say, and what does it mean?
Well, it was more good news on the economy, and I think that the story for 2021 is that the recovery is much stronger than just about anyone imagined. We had 379,000 jobs. That was almost double what the consensus estimate was. unemployment rate came down a notch to 6.2%. And even when you look at the augmented unemployment rate, which is what the Fed has been doing, has been emphasizing, it dropped a tenth of a percentage point too. So we made some solid gains during the month. The only downside to all of that is that that's causing interest rates to go up a little bit and giving the stock market some jitters. But that always happens when we move into economic recovery. So I don't think that's really anything to worry about.
Mark, if you read sort of Bloomberg every morning or, the Wall Street Journal, it sort of feels like half of the stories are talking about how we're approaching sort of bubble conditions in the stock market. Everything's getting, overinflated. And the other half are saying, man, this economy is on the verge of breakout. All this pent up demand and the abatement of the pandemic, and we're going to have an explosion here. So those seem like they're directly contrary to one another. Who's right?
Well, they're both right in a sense. And one of the things that it frustrates me a little bit is that we hear an awful lot about how we're still 10 million jobs shy of where we were pre-pandemic. And while every job is important, about 6 million of the 10 million jobs that were shy are in the leisure and hospitality industry, which was very important to Florida. But a lot of those jobs are part-time jobs. And I think they're going to come back fairly quickly, because when somebody takes a job in the leisure and hospitality sector, they're probably going to be taking two, because the average weekly earnings in that industry are relatively low. So I think the snapback is going to be much quicker than folks expect. When you look at manufacturing and construction, they're nearly back. And you look at the tech sector, employment in the tech sector is higher today than it was pre-pandemic. And some folks that are familiar with the Florida economy might say, well, why is he talking about the tech sector in Florida? And the tech sector employs more people in Florida than construction does. And if you remember Richard Florida's piece after the financial crisis, I think it was titled, "Is Florida Over?" It was, and I've seen that so many times. Nowhere in there did you see that stat that there are more people working in the tech sector than there are in construction. It's not just about people moving to Florida and having to build more stuff to accommodate all that growth.
Well, that question, is Florida over? That's a perfect segue to sort of where I want to take this conversation. And in doing so, I want to sort of go back in your own history, because you've been at this for a long time. And looking at your CV, in 1994, is that right?
84.
I'm sorry, 1984. You were a recent graduate from University of North Florida. You're living in Jacksonville. You get a job at Barnett Bank. And first thing they have you do is write a weekly commentary on the national economy, and then they added in a commentary on the Florida economy, which, by the way, for everybody at home, you should probably know that it's like 24-year-olds who are writing these great analyses that you're depending upon. But let's put that aside. So you started back 35 years ago writing a regular commentary on the Florida economy. And I was wondering, maybe you could just tell it, what was the Florida economy back in the mid 80s? Like, what set the scene for where we were at that time?
Well, I'm going to more fully set that scene. I was 21 when I joined Barnett. And I went to UNF part-time over a series of years while I was working there, and also commuted back and forth to Gainesville for the economics program there. But Florida was very different back then. I like to tell people that there was still a lot of frontier in Florida, and that, I think the town of Port St. Lucie, I believe in the 1980 census had 12 people. So, I mean, not 12,000, 12 is what they had, 12 people. And, the county had a little bit more, they had about 140,000 people. But there was a whole lot of Florida that wasn't connected yet. I-75 basically ended in Tampa. I-95 did not go completely down to South Florida. So you had interruptions where you'd have to get on US 1. And so there were a lot of areas to open up for development. And I remember one of the first articles that I wrote about Florida dealt with population growth. And at the time, we had just surpassed Pennsylvania to become the 7th largest state in the country. So there was a whole lot of growth. I look back at the numbers, and Florida's population has roughly doubled since then. We've had about 10 million people in the state in 1984, and we've got, of course, over 21 million today. And a lot of that growth, most of that growth took places in places that really didn't exist to any great extent in 1984.
So what was driving the economy at the time? And what were the key industries, the key levers that you saw in
well, one of the concerns that we had, that economists had about the economy in the 1980s, was that a lot of growth in Florida was driven by the industry of growth. John Godfrey, who hired me at Barnett, he used to say that, that essentially we had 1,000 people moving here a day, and they would tend to rent a U-Haul, and they would wear out their car on the way down here, so they'd have to buy a new car, and they'd have to buy a house, and all of that generated a whole lot of growth. And then the rapid growth in population meant that every retail chain, every household services chain, every law firm, every financial institution wanted to open an office in Florida. So all that growth created a lot of growth, but we weren't generating a lot of growth on our own. And that was a critical problem for us. I think that back in the early 1980s, we may have had 7 Fortune 500 companies, but that number actually went down during the 1980s. I think Ryder was the biggest company in South Florida at the time. Burger King may have been a private enterprise at that time, and they were in South Florida as well. There was no AutoNation yet, though. There was no, there was no Blockbuster. Well, Blockbuster Video did come out about that time. Mm-hmm. But we weren't generating a whole lot of growth. You think about the space program. We launched the rockets, but we didn't build the rockets. We didn't build the satellites. And so there really wasn't a lot of value added in the state. And all that has changed. It's changed tremendously over the last 35 years.
So why don't we frame this and talk about sort of today's economy, and then I want to go back and let's talk about how we went from that sort of it sounds more like almost 100 years ago what you're describing, but how we got from there to here, and what some of the key sort of decisions were, some of the key leaders who drove us there. So as you look today at the Florida economy, what do you see?
Well, I see an incredibly diverse economy, and one that is very likely to be back at its pre-pandemic level by the end of this year. When you look at Florida, one of the things that is hard for a lot of people to understand is you've got 23 very distinct markets. There's actually more distinct markets than that. But one of the things that's a little unusual about Florida is that most of the connections within a market are east-west, not north-south. So you look at all the main thoroughfares in Broward County, and they're going east-west, which means that it gets really crowded when you try to go north-south because there aren't as many routes to go north-south. And that really makes each market very different. And for a long time, there was a worlds of difference between Dade and Broward County. They have grown more together, and that was something that changed after Hurricane Andrew. But prior to that, they were very different markets, and they still are very different today, but not as different as they were prior to Andrew. And that's true of every market. You go on the West Coast, and you look at Manatee County versus Sarasota County, and even though the airport's right there in between the two, they are distinctly different markets, different demographics. The folks who move there come from different parts of the country. And it's a story that's repeated all over the state of Florida. But when I look at the state right now, it is strong from top to bottom. It is strengthening from top to bottom, I should say.
And so flesh that out a little more. I mean, why do you say that? What leads you to do that?
The areas that have been hit the hardest have been the areas that are most exposed to tourism. And when people think about Florida's economy, one of the things that I have spent most of my career doing is dispelling myths about Florida. And then a lot of people think, oh, it's just tourism and retirees. And I said, tourism is a lot smaller than you think it is in Florida. Even in Orlando, it's smaller than you think it is because the tourist corridor is a well-defined corridor that's a good 20 minutes away from downtown without traffic. And what's going on in downtown Orlando and in Winter Park and really all the way up I-4 headed to Daytona is a whole lot different, and on the beeline headed to the Space Coast is a whole lot different than what's going on in the tourist areas. And it tends to be more professional services, tech services, life sciences. The economy has always been a lot more diverse, but where this recession has really hit and hurt us has been in tourism, particularly international tourism. And the two places that we get the most international tourists are Orlando and Miami. Well, maybe in reverse order, but they're both incredibly dependent upon international tourists. And unfortunately, they're not likely to come back all that quickly. But I don't think that's going to impact the pace of recovery, because I don't think the tourist attractions are going to be able to get to full capacity all that quickly either.
Yeah, look, believe me, that's something I understand, because Kaplan actually brings more students into the United States to study than anyone else in the world, or into the UK or Australia or Singapore. And that business is obviously frozen. So we're sort of feeling the pain on that as well. Luckily, we have our online learning, which props it up. But yeah, the international travel is, anybody who's in that industry right now is it's brutal. So you've described a very, you're really kind of describing a powerhouse economy right now, and this more rustic, let's say, economy back in 1984. Let's go back and do a bit of a history lesson and talk about what are the key moments as in Florida's history over that last 35 years that have turned this economy into the economy it is today. What would you say are the key moments, the key levers?
One of the things that I like to tell people is that recessions tend to be key turning points, very key turning points. When I moved to Florida in the early 1980s, we were still recovering from the 73-74 recession. That was particularly true in South Florida, where we had a glut of really what were middle market condominiums. They weren't luxury high rises like we built in the 1990s. These were middle market condominiums. They weren't on the ocean, but we had a severe glut of those that we were working through. And one of the lessons we learned from that recession was not to overdo that again. And so, problems that came up were elsewhere. I think one of the key turning points for Florida was the 1990-91 recession, which coincided with the Gulf War, but was also a real estate recession. It wiped out. We saw the savings and loan industry finally get wiped out. Folks that have been in South Florida for a long time probably remember the SunTrust Tower, which was one of the most prominent building in downtown Miami for a long time. And I think that recession really reshaped the way that commercial development was done in Florida. And we really have not seen the return of the boom bust in commercial real estate that we saw prior to that recession.
So
where we did see it was in residential, which, that's what happens with the economy. You fix one area and you squeeze the exuberance into another area.
So what is it about that 91 recession that led to sort of a reworking of the commercial real estate market?
Well, I think what happened is that it became more data driven, in that it was really prior to that recession, it was really like a bunch of wildcatters doing residential development. The lending was done by folks that didn't have particular expertise in it. It's the savings and loans played a big role in that boom. We also had a lot of out-of-state lenders that weren't that familiar with the market, and they just saw the growth and got behind a lot of projects that didn't make any sense. And so I think that commercial development has been much more data-driven. It's been much more rational in the aftermath of that. And we really haven't faced the overbuilding of office and industrial space to any extent that we did during that recession. I wish that the same could have been true residential real estate, but we got caught up in a bubble that was not necessarily of our own making, and unfortunately there was more speculation than we had counted on.
Yeah. And by the way, we're getting some questions, but people are right now focused on issues today, and we're going to get to those. But I want to go back again through. We have somebody who's been following the Florida economy for 35 years. I want to just really understand where we came from. So we talk about the '91 recession and how that sort of imposed more sophistication on the market. I guess enough people lost money that was not very appealing to just willy-nilly put up buildings.
We also culled the herd in terms of lenders. Southeast Bank went under, unfortunately, shortly before Hurricane Andrew. Had they been able to hold on for another 9 months, they probably would have been just fine. But hurricanes have this weird effect where they transfer wealth from insurance companies to banks, and they would have probably been able to make it if they could have held on for a little bit longer. But we lost a lot of the savings and loans went by the wayside, and we had a big consolidation in the financial sector, and I think that helped enforce some of the discipline that we've seen in commercial real estate lending.
Let's talk a little bit about Hurricane Andrew, because obviously that was for South Florida, that was a pivotal period. What kind of long-term impact do you see that having had?
Well, that was a real shock to the state because we hadn't had a powerful storm like that. It was a relatively tight storm. You didn't have a tidal surge with it. It was a very rapidly moving storm. And at the time, we were grappling with the overbuilding in commercial real estate. It hit south of Miami and did about, $12 billion in property damage, which was unheard of at that time. I think the worst storm that we had was Hugo, and Hugo had done maybe half that much damage, and that was only a few years earlier. And so it was just unfathomable that there was this much development. And I think what that really woke us up to was that Florida was now so densely populated that when a hurricane hit Florida, it was going to do a lot of damage because there was a lot of high value property that was going to be in the way of just about any storm that hit the state.
But it seems like, the '91 recession essentially hardened the lending standards and the building standards, and then, or the construction standards. And then obviously Andrew literally created the, hardening of the infrastructure, with new building codes. I'm wondering if there's something in this notion of the Florida economy becoming more resilient through these multiple.
Yeah, that's a good point. And I thought where you were going to go there was that it actually helped fuel a recovery because we had so many houses that were destroyed that we actually had a little boomlet in residential construction, which helped lift us out of that 90-91 recession. But certainly construction standards were tightened after Andrew, and they were tightened again after the spate of storms we had in 2004 to 2006. And really, even the tightening in construction standards we saw after Andrew meant that the damage from those storms, even though there were a number of storms that we had in the middle of that decade, it would have been so much worse. But most of the properties that were facing the coast held up incredibly well. One of the most damaging storms was Wilma, because Wilma went out to the Gulf of Mexico, went to Mexico basically, and then did a U-turn. And it wasn't so much the stuff on the coast of Naples where it came ashore. It was really the backside of Broward County and the backside of Palm Beach County that just really hadn't been tested by that strong winds. And that storm, that's what really broke the back of the real estate cycle that we were in. That storm broke into three pieces, and I know that Wachovia at the time, we had windows knocked out of our West Palm office, Fort Lauderdale office, and Miami office. That stayed out for a while because they didn't make that glass again, so we had to reverse it.
Um, let's think about some of the sort of decisions and decision makers over the course of this 35-year period. Like who were the people who had the most impact on converting the Florida economy, and what were some of the choices that they were facing, and what were some of the, as you look back, if we had gone one route versus another, what kind of difference might we have seen?
Gosh, that is it's tough because for most of my time I was focused on the economy and banking system, and so a lot of the leaders that I saw were in that world. But when I think outside of that world, Bob Graham, Lawton Chiles did an awful lot for Florida. And in today's politicized world, it's kind of rare that you would cite politicians, but they were truly of a different breed. I mean, I don't know if they could be elected today. They're way too moderate to be elected in the Democratic Party, and they probably they probably would fit more in the Republican Party of today, but they're not in the mold of today's Republicans either. But of kind of the modern politicians, I'd say Jeb Bush. Jeb Bush astounded me. I mean, I was just so incredibly impressed. And I knew him. I first met him in a business setting when we were doing a commercial real estate event in South Florida. And I didn't even make the connection that his father was was George Bush. It didn't even dawn on me. It was that early. I think his father may have been vice president at the time, but he did an incredible job. And I'm still, when we had that spate of hurricanes and he had that gaggle of press, and someone would rattle off a question to him in Spanish, and he'd say, okay, this is how we're going to handle the Spanish press. I'll repeat the question in English, I'll answer it in Spanish, and then I'll answer it in English. I was just totally blown away. Carlos Magoya in South Florida, incredible leader. And Wayne Huizenga, I mean, helping bring new industry and new investment into Florida in a way that we really needed it. And really help reinvigorate, not to mention pro sports too. a lot of really good things. I mean, those are some of the folks that really stand out to me. I was fortunate at the bank. We had really good leaders. I mean, two people that really stood out to me were Alan Lastinger and Steve Hansel, and just really incredible leaders. Alan Lastinger. Not only was he a great banker, he has the just incredible knowledge of Florida, having started at the Barnett Bank in Gainesville.
Well, obviously in this crowd, Wayne Huizenga is a beloved figure, and I think most people who are watching this probably know a lot about the things that he did. But I wonder if you could just take us back, because you talked about Lawton Chiles, Bob Graham, Jeb Bush, three politicians, each of whom was, competence was kind of their central to their personas, and as opposed to, ideology. And I'm wondering what decisions, like as you go back, where they could have gone one direction versus another, like what are some of the decisions that each of them made that you feel either furthered or maybe in some cases set back Florida's economy?
One of the things that I would say that unites those three is their love of the state of Florida. And anybody who knows these folks knows that they love the state of Florida. I mean, Bob Graham wore a tie with the state of Florida on it every day. So I mean, they just love the state of Florida, and so they were always, in a private capacity or in a public capacity, advocating for what was best for Florida. And I think that that in the case of Bob Graham and Lawton Chiles, I think that they, their greatest gifts to Florida, their greatest contributions to Florida's growth, I think, were in helping make sure that change wasn't implemented too quickly, and that we had a lot of battles that I remember there was a big push in the 80s to bring in casinos, which we do have casinos, of course, now. But I think the push was to bring them in a way that I think would have been a little disruptive. I mean, this was shortly after Atlantic City introduced casinos, and I don't think that casinos helped Atlantic City. I think that casinos, if they're an entertainment option as opposed to everything else you have going on in the market, it's fine. But I don't think we need a casino district. I don't think we need, and so I think that they helped slow the rate of changes that we would have. In terms of, it's hard for me to pin down precise policies that they enacted. I'd have to research that a little bit. I think that more important than anything else, we had very competent leadership in Florida. I wouldn't single anybody out, but I would say that 8 out of 10 of the last governors, maybe 9 out of 10, have been truly outstanding, and that not every state can say that. And we have a lot of contentious issues in Florida, and what's important to Miami may not be as important to Ocala or Pensacola. I mean, there is a lot of diversity within the state, and trying to manage that is very, 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 very difficult.
Yeah. Mark, as an economist, you're, by nature, you're an observer of what's going on. I got to believe you've got opinions, right? So you probably look at, say, the Florida economy and say, man, these guys ought to do this or that. But you're just observing what actually happens. And I'm wondering, over the course of 35 years, like, surely there are times when you have felt it is clear that what Florida ought to do is X, and sure enough, what Florida did was Y. And I'm wondering, are there examples of that you can think of?
I'm trying to think of something that Florida's done that was wrongheaded. I think the biggest challenges that we've always faced are keeping up with infrastructure, and one of the things that always made me kind of chuckle, but in a way that wasn't, I didn't really think it was funny, just it was kind of ironic, was that Orlando's population had nearly tripled and I-4 had stayed the same. It's like they're finally fixing that, but really the tripling in Central Florida's population understated it, because that if you just divide the number of tourists that visit Central Florida each year, you can add another 2 million people per day. So it's just incredibly, there's an incredible amount of people there. So I do think that it's been tough to get infrastructure. I was really excited about All Aboard Florida, and then and Virgin Rail, when it became that. And I do think that I think that it's, as I follow all sorts of economies, and this entire project cost less than 8 miles of the high-speed rail that they tried to build in California. And while it's, on a hiatus right now, essentially, because, it's going to, I do think that ultimately that's going to be a great thing for Florida. But I think it's great not to go. I'm glad that Florida didn't embrace the government-run high-speed rail, because I don't think it would work. And every time that I've met with people when we discussed high-speed rail, I says, you don't get it. And you're an expert on transportation and you don't get it. When it comes to high-speed rail, it's frequency that matters, not the speed that you can get me from A to B. Because if I have to wait 3 hours to get on the train to get from A to B, it doesn't save me any time. I need something that's going to be there every half hour on the half hour, or every hour on the hour at the least. And so I think, one of the things that I'm glad for, not because I don't want to see high-speed rail, but I'd want to see it done the right way.
Is Brightline the right way, or are you skeptical of that as well? Brightline, I think it is the right way. It's closer to the right way, in that in order to make this thing work, it has to be a real estate play, and there's got to be a way that you can capture the real estate, the value of the increased value of real estate. Mobility is going to be a big challenge for us. It already is a big challenge for us in South Florida, and
And I think it's a step in the right direction. And again, it's the cost, the frequency, the usefulness of it is much greater. The value of rail transportation, whether it's light rail, um, heavy rail, high speed rail, or we don't really have subways in Florida, but we do have the above ground system. It's not so much that you're going to get people out of cars. The value of it is it increases mobility in congested areas.
Mm-hmm.
It gets you around. In Atlanta, when Mercedes-Benz relocated their headquarters from New Jersey, they said, we're going to go to Atlanta and we need to be somewhere where our employees can walk to a MARTA station. So if they need to get to the airport, I don't have to worry about what traffic is. I know they can be to the airport in 35 minutes. So that's the value of mass transit, and the value of Brightline, I think, will increase over time as mobility challenges get more and more challenging.
Yeah. Let me shift gears here a little bit and talk about where we are today, because it's certainly, I've lived here in Fort Lauderdale for 15 years, so I'm not a 35-year guy here, but over that period, I've never seen it like it is now. We forget it. There's the pandemic, but there's a lot of friends of mine from New York or Chicago are living here, at least for now. These are people in private equity or banking, and they're coming to love it. I mean, and of course they're finding it pretty appealing that the weather is great. There's no income tax, and I'm wondering, coming out of the pandemic, do you think that we've reached an inflection point in Florida, in South Florida in particular, where people could live anywhere? Why not live here with those assets? Or do you think that so will a lot of these companies come down here? Will a lot of individuals who can live here decide to do so, or will everything sort of revert back to where it was, and New Yorkers go back to New York, and people from Chicago will move back to Illinois?
I think it's an inflection point. I don't know whether it's the inflection point, but we've had a number of these. And when people come to Florida, they find out that it's so much easier to do business. And it's, from my perspective, I mean, in my area, we have an office in New York, we have an office in Charlotte, and so we've got about split 50-50. And to me, visiting New York is a heck of a lot better than living there. You're able to do so much more stuff. I got a sister who lives in New York. I'm certain that I get out and about in New York more than she does. And it's so I think that a lot of folks, when they leave New York, they say, it's not that hard to fly in, and I'm not going to miss out on the big city life. And at the same time, after they've spent some time down here, they realize, wow, much of what I thought only existed in New York is actually available everywhere else in the country too, and certainly in South Florida. And so I think that they find out they're not missing nearly as much as they thought they would when they left New York.
So as you model, where the Florida economy is going, do you assume that there's going to be, that more of the financial power is going to come down here? The other industry is going to come down here, or do you model it as things are going to revert back to form?
Well, there's certain things that we know are key strengths in Florida, and one of those is in South Florida. Miami is the hub for Latin America. It's always going to be the hub for Latin America. That's come to mean new things as we've gotten into the digital age. And it used to be that Philip Morris had their Latin American headquarters there, and so it looked like we exported tons of cigarettes, even though we didn't make the cigarettes in Miami. They'd show up in our trade numbers as we did, so that part's always going to be there. I think that we are seeing a change, that we're seeing more specialized finance come in. We've always had a lot of wealth management. I don't know how that's going to completely play out, but because there's a number of financial centers around the country, And with Zoom and the technology is so easy, you know, that even Wall Street is not on Wall Street anymore. I mean, most of Wall Street in New York is in Midtown. It's not on Wall Street. You go to Wall Street, it's basically like going to Old Town Tampa, like going to Ybor City and thinking that that's where all the action is in Tampa. It's more of a tourist destination than it is actually where all the traders and salespeople are.
Let me get to a couple of the questions. You know, my good friend David Armstrong has a question about, you know, we've got all these leisure and hospitality jobs that are relatively low wage, and we've got the gig economy. Do you think that raising the minimum wage in Florida would help, or would that hurt? I mean, what would that do to our economy?
You know, I'm not a big fan of raising the minimum wage. What I would really like to see when we raise the minimum wage is to have a separate wage for teenagers. Because I think that when we raise the minimum wage and it gets up to $15 an hour, that we're going to price a lot of teenagers out of the market. And having a job as a teenager is so important, because that's when you learn to listen to somebody other than your parents. And you learn that showing up for work, even when you've got something else to do, is real important. And you learn the value of work. And so I wish we would have a separate wage for teenagers and a separate wage for seasonal work. And so that for seasonal workers, and maybe a separate wage for training, so that employers could take a chance on hiring workers that they might not hire otherwise. You know, if they made those changes, I'd see no problem with raising the minimum wage. As it is right now, what's going to happen is that restaurants are quickly going to move toward a quick service model. And so you're going to see that full service restaurants that serve, you know, and I can't say this for a particular company, but I'm talking about places like Olive Garden and Applebee's and Chili's that have full service waitstaff. I think that they are going to have to move to a quick service model, which is more like a Chipotle model. And so they're going to have to take labor out of the equation. So, you know, it's, you know, I would hope, I mean, what's more important than raising the minimum wage is having an environment where we're creating more opportunities for folks to move into higher wage jobs. I read an article in the Wall Street Journal, and they were talking about someone who was displaced. He was a short order cook at a restaurant, and he wound up working in a warehouse and then being trained to drive a forklift. And so suddenly he's making 4 times as much money as he was working in the restaurant. I mean, we want to make sure that those opportunities are available, and that folks have the means and have the ability to take advantage of it.
So, all right. So what's interesting, maybe a $15 minimum wage with some exceptions, some designated exceptions. A good concept. Any other economic prescriptions you would say you would recommend?
Well, I do think that you know, I don't think we're ever going to put an income tax in Florida, and I don't think it'd be a good idea. Florida's in a unique spot where we collect a lot of sales taxes because we have so many tourists that visit the state, and so essentially tourists help subsidize Floridian standard of living, which is a great thing. The one thing that is a little bit difficult for local governments is property taxes and the way that property taxes are valued. And I don't know what the proper solution is. Right now, we're not facing anywhere near the problems that California does, but in California, with Proposition 13, the issue that they have is that folks never let go of a house. When they have a house, they never let go of it because they've got a low tax basis on it. And with that low tax basis, they can rent it and come out just fine. And so it's just incredibly unaffordable. No one can afford to buy a house in California.
Well, on that point, Tim Rubin asked the question, which I think probably everybody wants to know. What's your assessment of the South Florida housing market over the course of the next decade or so?
Well, you know, I think that we saw this huge surge in prices in the fourth quarter, and normally when prices go up, I always say look at the median, not the average, because you had a lot of high-priced a lot of higher priced homes that sold. And that's what's happened because with the pandemic, people want more house. And so people have been buying larger houses. They've been buying more expensive houses. And the folks who have those houses, they also suddenly found out that rather than downsizing, they needed more house. So fewer people were wanting to sell. So that's led to some very intense competition for what homes were on the market. On top of that, credit was tightened as we went into the pandemic. So fewer folks have been able to qualify to purchase those lower priced homes. And we haven't had that many transactions there. So this year, I do think that the rate of price appreciation will slow. The rise in interest rates, I don't know that we're going to hold on to all the recent gains. So, we're going to see mortgage rates get up maybe as high as 3.5% for a short period of time. And I think they'll come back down and probably end the year closer to 3%. But those higher interest rates are going to make it tougher for folks to buy bigger houses. So I do think we'll see that the rate of increase in sales, the rate of increase in prices will slow, but it's still going to be an awfully good year. There's a lot more buyers out there than there are properties on the market. And as long as that condition persists, we're going to see prices go up.
Let me, as we get towards the end of our segment here, let me ask you about, over the course of 35 years, what are some of your biggest wins and maybe biggest losses? And what did you learn from them?
Gosh, I think that fortunately, I'd say there's been more wins than losses, but by certain, my biggest loss was the not anticipating how bad the housing crisis was going to be. I mean, I knew that there was a lot of speculation, but I did not, I did not know how bad credit underwriting was in the industry. And it was mainly because at the bank, credit underwriting was very good. At all banks, it was very good. It was those non-bank lenders that were selling the mortgages as soon as they were originated that really created all the problem. And we didn't have good data on that. And I did write an academic paper on that I published out in the Western Economic Journal. And one of the things after the financial crisis, I committed myself to doubling down and studying and reading, and went through a period of time where I was reading a book a week, trying to figure out, how we could have missed all of this. I think that some of the big wins are that we've done a very good job of nailing down exactly what the damage has been from catastrophic storms that we've had in Florida, and what that was going to mean for the economy in the way of insurance rates and the ability to rebuild. We saw it most recently with the storm and it hit Panama City, and knowing enough about that market, knowing that it was going to be very tough to rebuild here because the part of the economy that was decimated was really workforce housing. And you're going to run in the political environment, you're going to run into all sorts of issues. It costs so much to build, so you can't rebuild what was there previously. Mm-hmm. But at the same time, you want to replace a lot of that housing that was lost. Another big win I'd say is an '87 stock market crash, and saying that this was not as big of an event as it was made out to be. I remember quite vividly that day. And I ought to roll back the clock for just a minute. One of my first days at the office, I think the stock market rose by 30 points. And I said, and people were commenting on it. And I said, one day we're going to see the stock market go up 100 points in a day. And they're like, oh, no way. That'll never happen. That'll never happen. And I was like, it's just math. It's just math. I mean, you can figure this out that Dow's going to go up that much. But the '87 stock market crash, what a lot of people didn't realize is the market had risen more from February to August of 1987 than it did from the market low in 1982 to February of 1987. So in that preceding 5+ years, the market had gone up a lot, but it went up more than that in just a matter of months. And what few people still realize, there was no recession associated with the '87 stock market crash. The economy didn't have a negative quarter at all. The Fed did cut interest rates, but they reversed it after about 2 months. And the stock market ended 1987 at a higher level than it began the year. So it still rose for the year. And that's true, the S&P 500, Dow, and NASDAQ. So I think that was a big win. We did, the Gulf War, I think was a pretty good win too, but it was also a hard lesson. We knew almost to the hour when the recession ended, but that was the first recovery that we had that was a jobless, a very slow, agonizing economic recovery. And I remember somebody said, well, what happened to that prediction about the recession ending? I said, well, we were right about that. It's just what we were wrong on is that we thought the recovery would begin when the recession ended. It didn't work out that way.
And do you get, how does, whether you're right or wrong in some of these big issues, how does that impact your career? Like,
Well, you
how does
definitely
that work in
you definitely want to be more right than wrong. But I was a goalkeeper I played soccer as a goalkeeper. I used to put a lot of pressure on myself, but you can't have a shutout every game. I mean, that's not realistic. But if I didn't, I would feel like a failure, and I'd be hanging my head. And I remember my coach told me, it was Coach Ambrosic. He said, Mark, he says, you practice hard, you get in the right position, and if you can't make the play, you can't make the play. You do everything in your power to make the right call. And I really take that advice to the workplace. I mean, as long as we've researched it and we've studied it and we've thought it out as well as possible, and we presented the best case, then I'm not afraid of being wrong. That comes with the territory. What bothered me the most about the housing collapse is that we missed it. It was so much worse than we thought. I said, well, what on earth did I thought I had done everything right. So what was it that I was missing? And, it became clear to me that what I was missing was what was happening outside of the traditional banking system. And I wasn't paying enough attention to what was happening outside of the traditional banking system. And so, we correct that and always try to ask ourselves now when we're in our forecast, okay, this looks good. What do you think we're missing? And try to test it to see, what are we missing?
So it sounds like in your economic analysis, you've sort of been hardened by crisis in the same way we talked about earlier. Florida got hardened by the 91 recession, the 92 Hurricane Andrew and so on. But you feel more resilient in your ability to project the future now?
I hope so. I feel more resilient, but it's always challenging. I mean, it is the economy you hear the word unprecedented so many times, and one of my fears right now as to what we may be missing is that we've got so much stimulus coming into the economy at a time where the economy is already gaining momentum. And so this $1.9 trillion stimulus, which is going to make its way through the Senate this week and be enacted, that money's likely to be hitting at a time where the economy was already going to be growing 6 or 7%. On a GDP basis, we will be back to where we were pre-pandemic by the summer, and employment will be completely recovered by early next year. So, you add all this fuel onto it, and my gut tells me, there's really no way that you can analyze this until after the fact, but my gut tells me that we're overstimulating the economy and that we're likely to have a more problematic inflation than the Federal Reserve is thinking we're going to have. And I just don't think that things have changed that much. Inflation is a monetary phenomenon, and we've created a whole lot of money, and we're likely to see a little bit more inflation. And for Florida, a big real estate economy, inflation is not necessarily bad. It means real estate values are going to go up. But for low wage workers, it's a real challenging environment. It means their real wages aren't likely to rise that much. It's going to be tougher for them to make ends meet. All
right. Well, that's it. I mean, that's a good point to end on. A lot more we could cover, but inflation coming down the pike is your final word on today.
Yeah, well, I not think we're going to go back to the 70s and the early 80s. At least I hope not. But I do think it's going to be a little bit more. We're going to see a little bit more inflation than I think people are counting on.
Okay. Mark Vitner, thank you so much for joining us. Really interesting conversation. Let me pass it back to Bob.
Thank you very much, Andy and Mark. Incredible discussion, a lot of information. Thank you so much. The historical perspective on Florida's growth and economic transformation, especially following economic and natural crisis events, is really valuable as we work within our businesses to recover from the past 12 months of pandemic. I'm on a morning call every Friday with a lot of our restaurant and hotel owners and managers. And this morning, just before this call or this Zoom meeting, restaurants are seeing growth that equals what they were experiencing 12 months ago, which is incredible. So if you survived the pandemic as a restaurant, business is coming back pretty quickly in South Florida, particularly in Greater Fort Lauderdale, and hotel occupancies are on the rebound as well. So a little faster than we anticipated, but we're seeing good indicators in South Florida, and particularly Greater Fort Lauderdale. I want to thank again our sponsors listed on the screen. And I'd also like to thank Gail Bulfin. This speaker series was her idea as a way to allow our Alliance members to interact directly with our top business thought leaders. As you can imagine, securing top-level leaders and coordinating schedules has been a daunting task. As Gail always does, though, she has delivered an exceptional experience for all of us. Make sure you see the March 19th issue of the South Florida Business Journal for a story on the highlights of today's Leadership Series session. Today's session will be posted online this Wednesday, along with each of the other Speaker Series events at gflalliance.org/speaker series. Be sure to join us for our next Leadership Speaker event on April 2nd, which will feature Magic Leap CEO Peggy Johnson in an interview moderated by Penny Schaefer, Market President South Florida for Florida Blue, and she's also a past chair of the Alliance. Thank you all for attending today's Leadership Speakers event. We are adjourned.